Well, greetings once again, and thank you for dropping by for the new edition of Mentor Mike's Market Movie. Today is Friday, July 27, 2012, and today we're ushering in the new version of the M4. We're going to be taking a look at the charts from each of the days of this past week, and then we're going to do a replay in depth on one of those days. But before we get started with that, I want to just thank you all for your comments regarding the market movies. It seems that many of you like them very much and have gotten a lot of benefits from them, and that makes me feel good. So we're going to hang in here. I don't know how much longer I'll feel like doing this, even on a weekly basis. But for the time being, we'll keep doing them here as long as you keep enjoying them. So before we get started, though, I want to share a couple of photos from my vacation to Alaska and the Yukon Territory. And don't worry, I'm not going to bore you with a bunch of slides of my summer vacation, but I got to show you these because they're particularly amazing. And if you're a fan of the wilderness and beautiful scenery, you got to take some of those trading profits and go to this part of the world if you haven't been there already. So, check that out. Isn't that an amazing sign? The town down below is Dawson City, Yukon Territory, and this is the Klondike River, and this is the Yukon River, and this is where they meet, just south of Dawson. Amazing landscape going off into the distance here. Now, imagine that you're going to turn to the right and look up the river in the opposite direction, and what you'd see is this. And it was just amazing. It really takes your breath away. And here's the truly interesting part is these pictures were taken after 11 p.m. at night. So it's not for nothing. They call this part of the world the land of the midnight sun. In the summertime, you get something like 20 plus hours of daylight and just a little bit of twilight. So it's really amazing, and you got to get there while it still looks like this. All right, now let's take a look at our charts from this past week. Here is Monday's chart from July 23rd. You'll see a variety of different chart templates and whatnot. Basically, this was a day with two turning points. We had a low early in the day session and then a high later on. This is a pretty typical day. We had some bearish trades early on, then we had the transitional move up, some bullish trades, and that was pretty much it because the turning point here at the end came too late in the day for really any trading on the short side thereafter. All pretty straightforward, you know. What I'm doing here is I'm using the parabolic from a higher time frame to act as our kind of trend-defining modulator here. So when we're underneath the red parabolic, we're looking to go short. When we're above it, we're looking to go long. And of course, you've got your red, white, and blue color coding on both the MACD and the stochastics. Essentially, on the short trades here, you're looking for the stochastic to be relatively high on the scale. That's where you're going to get in. Here you're going to get on the long side when the stochastics are near the bottom. And that's about it. Nothing too amazing here, nothing out of the ordinary. Here we have Tuesday the 24th. Same basic idea, just going in the opposite direction. Bullish in the morning, turning point right at the open. Mostly bearish during the rest of the day, and then a turning point here later in the day. Now, basically, what I recommend and the style that you're going to see me use going forward here is we're looking for with the trend, triple alignment, red, white, and blue trades. Here's a perfect example, this one right here in the middle. The red parabolic is defining our trend in the downward direction. We've got a secondary parabolic that's white on a lower time frame, and then we've got our our price and our blue moving average, completing the red, white, and blue bearish alignment here. Now, this is an example of the type of counter trend move that we want to stay away from. At some point in the future, if you get really good at the more conventional trades and you want to get aggressive and try some of these, more power to you. But I would say initially you're going to get plenty of opportunities without having to get into that risky stuff. Also, there are transitional moves just about every day. What do I mean by that? I'm talking about when the market goes from being essentially bullish to bearish, or in this case, bearish to bullish. And since you have one of those almost every day, and sometimes multiple ones, you want to learn how to trade those. And so what I recommend is that they're okay to take. They're not obviously as good as a nice self-contained triple alignment trade like this one here in the middle. But if you're going to take the transitional move, look for divergence, or look for a Ken Roberts style 1, 2, 3 top or bottom. Now, this drop here was obviously a really good short trade, or could have been, but I couldn't justify taking it. I mean, I would have taken it under other circumstances, but if I'm going to stick to these rules, I couldn't justify it because I didn't see any divergence on the MACD or the stochastic, and I didn't really see a 1, 2, 3 setup either. So I had to wait until this first move before I could get short. Now, this one was a little bit different because here you can see this is the lowest low of the day, but we have definite divergence on our shorter term MACD, and there's even a 1, 2, 3 bottom here. The low is 1. Here's your number 2. It comes down to number 3, but doesn't take out this low, and then it goes up from here. Now, I actually got in right here, and that seemed like a good idea because if you drop down, you'll see both stochastics are turning up at that point. But it came up, didn't quite hit my first target, and then I had to sweat through this before it finally took off to the upside and hit all my targets. It wasn't as scary as it looked because I saw the longer-term stochastic hanging in there bullishly, so I figured we'd probably end up okay. But still, that's not the ideal situation. All right, let's see. That's the 24th. Here's the 25th. I neglected to mark my my lines and my high-lows here. Sometimes I get busy doing other things. But basically, we had a high right here about 7 Pacific time. We had an early low and then another high over here. Now, this looks like a low, but it doesn't really qualify as one because, for all we know, the market kept selling off. So we did have the high, low, high situation here. So, again, bullish trades, bearish trades, and bullish, and then a bearish at the end here, separated by a couple of transitional moves. Now, this one here, I was looking at it, and you could kind of make the claim that this low here on the red stochastic came about here, but nah, that's kind of stretching it. I think I just jumped in and took this long trade out of force of habit, and because I knew that we were due for a delta turning point somewhere in this vicinity. So I didn't really have an excuse to take this. This one's different because you can see by that point we kind of had a 1, 2, 3, arguably Ken Roberts bottom situation that would have led up. And that's really echoed in the stochastic here very clearly. But I didn't really have an excuse to take this one other than the delta turning points. But as you can see, it eventually worked out. All right, let's see. Now we're up to, I think this is Thursday. Different chart template, obviously. And again, high, low, high. Very typical. Look at these, are pretty much right on the money here. This one's a little late, but these first two are pretty close to where they're predicted to occur. Couple of long trades here. Took the transitional move here because we obviously had divergence on the MACD. And then Here we had kind of a 1, 2, 3 bottom formation, and that's where I got in. You could also argue for a little bit of divergence here on this stochastic, but this one was pretty straightforward as well. And this is today's. This is probably this is the one we're going to do the replay on today, because we didn't really have a transitional move per se during the course of the day session. We had a parabolic flip early on in the pre-market, and then we had a little flip at the very end, but pretty much the whole day was unidirectional. Now, you might think that that's not a very challenging scenario to replay, but you'd be surprised. A lot of people have trouble with unidirectional days because they keep looking for the turnaround that never really comes, and they oftentimes get suckered into taking trades that they shouldn't have traded. So this is going to be what we're going to do today. We'll close that up, and as you can see, I've gone ahead and marked my chart up here as I usually do, and we'll mention that as we get to it. We're using a combo chart here, 1 minute and 5 minute. We have data from both speeds, both time frames on this chart. What you're looking at is primarily a 1 minute chart, but certain of the indicators are based on 5 minutes, including our red parabolic here. So here we are at 4 a.m. Pacific time, and we actually just kind of missed the perfect entry on the long side here. We're a little bit late, but I'm going to go ahead and get long anyway. And notice that what I've got here on the stochastic says we've got two speeds of stochastic, and I have put the Donchian channel on there, and that kind of provides us with what you might call a traveling tube of both support and resistance and overbought and oversold. So initially here, what we're going to look for on the long side is when our stochastic comes down and basically hits that bottom Donchian channel and then heads up again and crosses the longer stochastic. That's going to be the essential entry signal that we're going to be looking for. And hopefully, of course, the MACD will be close to a crossover as it is here. But what you'll find is that as between the stochastic and the MACD, if one of them is going to lag, it'll tend to be the MACD just a little bit. But anyway, looks like we're ready to start the data feed. And let's go ahead and get long first. And we'll draw our arrow. Now, as it says in the text portion of tonight's blog, I'm using a 9-contract, 3-target peeling off setup here, just so that we can get an idea of some of the full capacity of the automated trade management function on our NinjaTrader here. So I think we're ready to go. Let's blast off and we'll get the data rolling. Got to bring it in from where I had it tucked away here. And we'll crank it up to 50 times normal speed and see what happens. Ooh, that was quick. Sorry if you didn't see that. I didn't expect the chart to jump back to the margin there, but we shot right up and hit the first target, and that might be all we get here. Let's just see. I'm going to trail the stop as best I can. Remember, once the stop moves to its automated location, okay, and we're stopped out, I then move the stop according to the faster parabolic. Now, you probably can't see the lines on here. They're really, really fine. But this silver pennant right here is the parabolic. I purposely did that so that we wouldn't make the chart look too cluttered, but it's there. And it's really the the pennant over here on the price scale that is the important part. So there's our first trade, and we're on the scoreboard now with 187.50. And let's start the data and look for our next opportunity. 10 clicks puts us at 50 times normal speed. All right, now we're going to initially be watching that stochastic like about that. Now we're starting to break above the white moving average here. The stochastic is at its bottom Donchian channel and turning up. And one of the things that lies at the heart of successful day trading is once you are pretty sure you got a signal, you sometimes have to be pretty aggressive in entering the trade. Because if you hit that first target, you're home free. But if you don't, you got a losing trade. And you're not going to take too many of those before you're out of business. So if you think you got the trade, go for it. And actually, even though it's very counterintuitive to do that, and we all would love to have, lots and lots of confirmation that the market's going there, what actually ends up happening is that if you are wrong, you're going to find out faster. It doesn't take as long to have the market go back on you. Anyway, let's get long. And away we go. Oh, stopped out. That was a pretty short little trek there. Now, I'm going to do one thing here. I've got my stop pennant happens to be in red, and that gets a little confusing because we already have a red flag on there for the long-term parabolic. So what I'm going to do is change that stop pennant to yellow. And that should make it a little bit easier to see. Okay, now then, back to the data feed. Okay, now then, price is breaking above the white MA. The faster stochastic is coming up off the Donchian channel. We'll start the arrow, get long, and away we go. Come on, hit that target. There we go. Boom. Okay. Pause. All right, we're off to a better start now. Okay, we flipped the big parabolic. All right. We've turned around here nicely. Let's give that a shot. Okay. There's our other target way up there. Got the stop in profit territory and stopped out. And this arrow goes all the way over to here. And notice we've just crossed now into the real day session. The green line here is at 6:30 a.m. Pacific time. And not too shabby. We made 4 trades and $1,400 before the market even opened. That's the kind of day we like to see. Now, if you were a golfer or had something else that you wanted to do today, you could go launch yourself into the day knowing that you already made your bread and butter. All right, let's see what the market's going to give us next. Okay, looks like we're starting to curl up here. Nope, we flipped the parabolic. So I closed it manually. All right, looks like we're curling up again here. Okay. Always like it when we get at least to that second target. Ooh, and now the third. All right, let's pause for a minute. Draw the arrow to its proper length. And continue on. Okay, finally. Now, before I get started on this trade, I think I'm going to go ahead and take the parabolic here and change it from silver to gold so that I can see it a little better here. You probably still won't be able to see it all that well, but now I can see it just a tad bit better. Maybe we ought to go ahead and put it on there. I was trying to be all minimalist here, but since I missed that stop because I couldn't see it, that's not a good thing. Okay, there, that's a little better. All right, now we were going to get long, weren't we? Let's go and go ahead and put the arrow on there. And off we go. And we flipped the parabolic before we hit a target, so we're just going to hang in there. Now we're back to bullish again on the parabolic. Hit the target, have them move the stop. There we go. Of course, now I've got a gold pennant and a yellow stop, but that's all right. Okay, flipped the parabolic after we're in the trade, so we'll end it there. All right. All right, another opportunity to get long here, looks like. Got a very narrow consolidation, but hopefully it'll break out to the upside because it was let into from the upside. Oh, there we go. Hit all three too. Okay, let's pause it. All those greens that you see there on the time and sales chart means that we're making new highs for the day. Boy, this is some kind of corrective move, I'd bet. Okay, Looks like we're trying to get long one more time. Come on, hit that second target. Finally. Oh, stopped out. All right, is this another opportunity? Looks like it's trying. Oh, stopped out. Now, it's 12:48, and things are starting to lose some momentum here. I more than likely would not take another trade in this day. Oh, that's right. We started heading south here. Yeah, I guess we could have arguably gone short there because we did kind of have a divergence here. Looks like we had a twin top. But you know what? Let's not get greedy here. Okay, it's 1:02. Let's just run out the clock. And we are done. Okay. $4,475. Let's move this guy out of the way here. Now I have to compress the chart to see it all. And we ended up with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, all completely with the trend, all with very clear signals from the stochastics primarily, and a final score of, again, $4,475. Well, if that won't convince you to learn how to trade properly, I'm not sure what would. Well, that's what we do here at Pacific Trading Academy. So if you got any friends who haven't taken the course, tell them to give a watch here the next time we do this. All right, I'll see you next week. Thanks for coming by.